Hello, let's analyze the gold today. So, gold, we are on the weekly time frame, and on the weekly time frame, I don't see anything except this swing point, and then we have the rejection block. So, this is the weekly rejection block. And if the price this week approaches to this level, we were expecting that the price will get some support from here and then head higher. Why? Because this was the low and the price came down and closed higher. So actually this is the draw on liquidity. This one, the first target, the draw on liquidity. And then you have this one, the draw on liquidity. So these are two immediate targets. And then I don't see anything on the weekly time frame. Let's go and check on the daily time frame. On the daily time frame, what we have? We have QM, and these are the order blocks, and actually these are not the real order blocks. Why? Because they didn't take any kind of liquidity. What the liquidity is, at least the price to take the previous candle low. So this unmitigated wick can be the order block. So just below QM, what we have? We have the DOB, and this is also on the daily time frame. And once we got the DOB, what we are looking for? We are looking for another break of structure, right? So these all days will be long side days. And then what we got? We have this low, and then this high will shift here, right? And now our range is still from here to there. But I don't use the ranges on the daily or weekly time frame because I'm using the indicator, so that's why I'm just checking them. But if I have to draw them manually, I will not draw. Okay, and then this is what we got, and from the DOB, and now the price is still in the consolidation. So I don't see anything on the daily time frame except you draw some levels. So let's see, you have this day, this was the rejection block, price rejected, and then this is the kind of inside bars, I think, or maybe not. But anyways, the volatility is just contracting here. So this is a contraction of volatility, and then boom, now we are here, and this could be the daily rejection block. So here I don't see anything except this one was the rejection block, sell to buy. So this was a rejection block where the price rejected, and when the price rejected, this was your immediate target. Look here, if this day was a rejection day, and you can say daily rejection block, then what is your immediate draw on liquidity? This one. So this is the daily draw on liquidity. So if we open here, actually we should be long until here, and then the second target is this one, and the daily rejection block is also the daily draw on liquidity. So this will be your bias. And if we check this on the 1 to 15 minutes, and also this one we check 1 to 15 minutes. Okay, So on the daily time frame, we have this. We have two draw on liquidities today, and then we go on the H4 time frame. So H4 time frame, what we have? H4 time frame, we need to draw this one on H4 also. Okay, so this is the draw on liquidity. Excuse me. So this is the draw on liquidity taken out. So we check the day how it started and everything, and the next target is this one, and this is the rejection block on the daily time frame. So we don't have anything except on the daily time, I mean on the 4-hour time frame, we have the break of structure, but we don't have the QM, and this is the QM actually. So if the price takes this QM, then we will shift this low to here, and this high will remove. Then we will have a range from here to here, because this will be the QM, and above the QM maybe we will sell something from here. Okay, and on the H4 time frame we don't have anything yet, and where the day started, basically the day started here from this candle, right? And I don't see any kind of ranges here on this time frame, or even I think on the lower time frame will not have any ranges, because you see the consolidation here. And by the way, we go to the 15-minute time frame to check the ranges. On the 15-minute time frame, we have this range from here to here, and it's very long range, like it's almost 25 days the price is in this range. So what we do in this case, when the price disrespects the DOB, so the DOB is here. So whenever the price will disrespect the DOB, we start to mark the internal structure. So I will mark the internal structure from here, and then we have the range from here to here after this IQM, because this is the internal structure now. Inside this bigger range, the green and red, this is the major range, and these gray dots, this is the internal structure. We have I'm not going to talk what's happened here. We check the latest price action. So the latest price action, this is today's range. We need to start from here. So actually we have the range from here to here. The price came down but never closed below this one, so we don't have the valid change of character. So that's why we are still bullish. And then this is all consolidation, which I talked about on the H4 time frame, that we will not have any kind of significant range. So in this case, what I do, I go on the 3-minute time frame, and I tell you step by step what I do in this case when we are in the big range, something like this. This is where the day started. I simply come and I anchor from here, and now we have the ranges, right? We don't have anything on the back side. Why? Because we are just playing the internal range now. An internal range, rather than to start from swing low or swing high, you can start from here if you want to. But since the day started here, so I want to see that what the day is actually doing. So if you see that what the day is doing, bullish change of character, bearish change of character, bullish change of character, so it means it is taking the liquidity on both sides. And usually this happens during Asia session. or even during London session. So that's why we will ignore this whole price action, but we can see that the liquidity is taken out on the both sides of this 4-hour candle, right? And now when the London opens, what we have? We have the range from here to here. So remember this. If we have the range from there to here, we need to find what? The DOB. And below the QM, we have only this one, and this is already mitigated, right? So if this is mitigated, it means this is not the DOB. So the DOB is here. So if the DOB is here and the range is this much big, I explained several times in my videos that I will not enter directly here. Then what I do basically, I will start to find the confirmation entry from this DOB. In this case, we have the range from here to here, and DOB, let's check if we have any bullish 1 minute ranges here so we can buy. Then I just copy this one and paste, and then I want to reset my points from this low, because I want to find the ranges, bullish ranges from here now, from this point, right? So I will go on the 1 minute time frame. On the 1 minute time frame, what we have? So this is the DOB on the 3 minute, and then from here I will start to mark the range. So this is the low, this is the high, right? And below the QM we can enter long, and we don't have any kind of DOB. In this case, what we have actually, we have the breaker block, buy to sell. So this was the order block, buy to sell, this was the order block. And when an order block disrespects, that turns into what? The breaker block. So we have the breaker block, and we can enter from here. Let's see if we go to our draw on liquidity, and this is our first draw on liquidity, if we can get 4R at least. So this is the 6R, right? If you want, you can a little bit move your SL a little bit further lower if you want to. Otherwise, I think you don't need it. Here the stop loss is also okay. So still you can get 5.5R. So this is your first trade. This is the 3 minute DOB, right? And then what we have? We have the new range when we have another break of structure, right? From here to here, then from here to here. And what we have? We have a QM. So if we have a QM, just below the QM, what we are looking for? We are looking for another DOB, but we don't have any DOB. In this case, we can mark this one, but this one will be very much lower if the price can come. So better start to mark something like this, and then you check how your entry is, something like this. And then what you get? You get 5.5R again. So this is the first entry and this is the second entry, right? And then what you get? Now you see that low high, higher low, higher high, higher low, and another breakup structure. Now you have a very big range from here to here. And since you started to move from this point to reach to this point, and you have multiple ranges, so 1 minute ranges usually finished. You will not enter here and you are thinking that okay, this is the DOB, let's enter. Entering here with DOB and entering there with DOB is different. Why? Because these were the 1 minute ranges. Now the range is too big, so it means that this must be playing out on the higher time frame. So if we go on the 3 minute time frame, this one, I think this should be the QM, something like this. We check. So from here we are looking for the pullback to buy, right? In this case, what we have, you see, we have the QM, and from this QM we wanna buy. Then below this QM we don't have any order block except this one. So we are waiting for the price to come here at the DOB so we can buy and target this one, and then respectively maybe this one. We are already above our first target and we are looking to buy from this level. And if the price just took the IQM and now it made another breakup structure, so of course we will be looking for the bullish ranges when the price took 1 minute QM. So 1 minute QM, when the price took this one, we are not sure the price will reach here or not. We will start to find the range. If we can find 1 minute range, a confirmation entry, we will buy. If we don't find, it means the price is coming here. So we will check here. In this case, I will move this 1 minute range from there to here. Now I'm going to anchor from here. And we go back on the 1 minute time frame. And in this case, what we have, this is the DOB and this is the QM. So we have the range from there to here, and this is where we wanna buy. And this still looks like very big range. We go back to the 3 minute time frame to check if we can buy something from here. And on the 3 minute time frame, what we have, we have low and high. We don't have any high. In fact, if we move the range back from here to here and then we check, we have the range from here, and this is just the pullback and we don't have the QM. In this case, I don't see any kind of liquidity in this leg. So if we don't have the liquidity, then the market will generate the liquidity. So this is what, T2. And we are not going to buy directly here because I don't see any kind of order block from where we can buy. And we are looking for a confirmation entry from this level. So I will just move this one to here. Why? Because I want to find the 1 minute range, a confirmation entry, so I can buy. Let's see. So what we have, this one is the QM. So from here to here we have the range, and the price never reached here on the 3 minute, and rather the price is giving the confirmation entry, and we are looking for to buy something from here, and the price never reached this one and created another breakup structure. And now we have another range from here to here. After QM, we are not going to buy here because this is already mitigated, right? And this, what is this? This one is the change of character, and below the change of character we have what? We have the external order block. So from this external order block we can buy, and if we can find some, we check if we can find some confirmation entry here. So I move here to here so we can find something, and you see that we have the range from here to here. So below this QM we want to buy something from here, and then we can target a minimum 4 hour or 5 hour, something like this. Okay, and then we have this entry, and then what we got, we need to move the structure back so we can find some more ranges. And in this case what we have this range, and then we have another range, and the price already reached to the draw on liquidity. In fact, we have some buys here also. So you see that today's price action looks very beautiful on the ranges, but you have to understand one thing: if you are in no man's land or you don't have any ranges, then what you can do, you can start to mark the ranges, or you can anchor from here, and then you can plan your day accordingly. And we see that why we were bullish, because we have the draw on liquidities first and second, and the price already reached there. Okay, thank you.